Right guys, welcome to a video on technicals and fundamentals. So within the market there are two main ways to trade. We have technicals and we have fundamentals. Now here at TST we are purely technical traders. We position ourselves in the market using technical analysis. Whereas there will be some traders that are fundamental traders and they position themselves in the market purely based off of the back of those fundamentals or news. And we feel that there is no longevity to this. There are too many variables and it makes it really hard to predict. Now this is where technical analysis is king. Certain patterns, certain setups are going to repeat themselves time and time again. This makes the market much more predictable and easier to trade. We've also found that technicals actually line up with fundamentals the majority of the time. So let me show you an example of where that actually happens.
Right guys, so now we can have a look at that example of where technicals line up with fundamentals. Now we're just looking here at the pound and the US dollar. And you may remember that in 2016, around the 24th of June, Brexit happened. You know, the first ever Brexit announcement. And as you can imagine, we saw some huge moves within the currency market. Now, what a fundamental trader would do here is they would be looking at news events, they'd be looking at articles, they'd be trying to work out which way the market was going to go based off the back of this announcement. Now, this is all well and good, you know, sometimes this can work, but what we do see sometimes is we see price gets factored in before a news release happens. So for example, let's say the market has been moving to the downside all week, right? And then on Friday, what happens is we have a big news release for this currency pair and the news is really negative. So what people would assume is that the market would keep moving to the downside. But what we'd then see is we'd have a really fast recovery to the upside in the opposite direction. And that would purely be because we've already accounted for the bad news throughout the week and we've seen price move down. We've then seen that bad news release come out. People would assume that the market would continue lower, but what happens is we see a huge push to the upside in the opposite direction and fundamental traders would get burned. Now, we do take into consideration certain news events, and every morning at TST, we do highlight what news events we have coming out for that day, but we don't trade purely based off them. What we would do is manage our positions based off them. So for example, if we were in a Euro US dollar trade and we knew there was some high impact news coming out that could cause some pushes in one direction, what we would do is make sure that we have managed that position accordingly. We would go break even on our position, we would lock in some profit on our position, or we would close that position out. So that's kind of how we take fundamentals into consideration, but we don't trade purely based off of them. Now, looking at this example on pound dollar, what we can see is this is just before that Brexit announcement. And what we can see is, you know, some people may be assuming that, okay, this could be positive for the pound and we could see it go and smash to the upside, or we could see a massive push to the downside. But what we can also see here from a technical standpoint, even if we didn't know Brexit was happening, we can assume that the market is actually going to go and push to the downside. Now, what we can see here is we have broken our low within this bit of price. So what we can assume is there is an order block in this leg of price that broke that low, which I have highlighted. And don't worry, we will cover all these terminologies a little bit later on in the course. And then if we focus on this bit of price action here, what we can notice is we have an ascending channel. And typically what we get is we get a third touch on these ascending channels and we go and push in the opposite direction. Now, again, we cover patterns, price action, order blocks, you know, every element of our trading within the course. So don't worry if it doesn't make sense just yet. But basically what all these technicals are kind of suggesting to me is that the market is going to go and move to the downside. So if I just play out price action now, you'll see that we have a massive move to the downside really fast price action that created a big push to the downside, and it happened so fast. You can see from all these candles here, the market's moving quite slow, and then all of a sudden we have a massive candle like this in one direction. And if we actually use what we learned from the what is a pip video, and we take out our price range tool, we drag that down, we can see that that is in fact a 3,100 pip drop. Now that's not gold, we don't have to divide it by 10. That is a 3,000 pip drop. And you can see that even if we didn't know Brexit was happening, the technicals pointed for a push to the downside. So that is why here at TST we are purely technical traders, and we don't trade off of fundamentals. So hopefully that makes sense. Hopefully you can find some value in that. And don't worry if you don't understand these technical concepts. We cover them a little bit later on in the course. So let's get on to the next video.